Today, on the Social Investing Network, crypto bros are sweating as Bitcoin plummets to under $24,000, down over 10% since Monday and almost 25% in the last 5 days. We'll dive into what's causing Bitcoin to tumble. Plus, luxury brands are turning to crypto. With inflation sky high, luxury brands are allowing crypto as payments to accommodate young consumers. But is this a good idea? And speaking of luxury brands, why did Tiffany & Co. pay almost $400,000 for a toy rocket NFT? We've got all the info and more. It's Monday, June 13th. Subscribe below and hit the notification bell. Let's get into it.
Bitcoin's value is crashing, guys. Bitcoin is down below $24,000. We talked about crypto being in a bit of a crypto winter with eToro analyst Callie Cox a couple weeks back. Highly recommend you guys check out that video. Seems like the winter is getting deeper. So yeah, like I said, colder. Bitcoin, yeah, it's colder. Thank you. I was lost for words there. So Bitcoin dropped over 10% today, dropped below 24,000 for the first time since 2020, according to CoinDesk. There's a chart right there from TradingView showing the carnage. And Bitcoin is not the only one impacted. Actually, the entire crypto market is down. Here's a good heat map of a lot of the cryptos that are down. Ethereum was down below 1,200. I think it's up a little bit, but still below 1,300. A lot of the altcoins are also down big. So I want to talk about why is this happening. I think first off, we're in a bad macro environment. What I mean by that is like we had the CPI print last week, 8.6%, so record inflation, the highest in like 40 years. The Fed is going to have to raise interest rates, and we're going to get some more information on that this week. So stay subscribed to get the latest. The stock market is down, and I think a lot of people are feeling we're headed for a recession. So when those feelings are percolating, a lot of people that are holding risky assets like crypto jump to cash as more of a safe haven. So that's what I'm seeing. Obviously, we don't have a crystal ball here. We have no idea what the prices are going to do next. But as of right now, things are not looking so hot for the crypto bros.
Yeah, exactly right, Zay. And I think, one of the other things you mentioned, some other structural things within other lending platforms within crypto or, other exchanges where they're halting things that could also, lead to some sort of, let's call it, without calling it panic, but some sort of selling from people in the sense of like they're this dire news right now. But as you mentioned, without giving financial advice, everyone has their own due diligence and understands why they're buying. But it is a kind of a bad environment right now when you look at just the overall cryptocurrency environment. But this is something when you look at the history, this has happened. These cycles have happened, and that's part of owning riskier assets. You deal with the volatility, you deal with the fluctuations when you're owning riskier assets, and you understand how your own portfolio matches up to your tolerance.
Agreed. It is par for the course, unfortunately, for things to be good and bad. So.
I think you guys are right. This has happened before, but I think what's unique this time around is that this is happening coinciding with bad macro environments. So the last time when this happened, and back in 2018, 17, 18, when we had the last crypto bear market, crypto winter, the economy in general was pretty good. The stock market wasn't in a bear market. This time we're dealing with bad macro environments as well. This is the first time crypto is dealing with not only a crypto winter, but crypto winter coinciding with overall bad macro environment or even a potential recession. So it's going to be interesting to see how crypto acts. Obviously, the whole, people talking about how Bitcoin was supposed to be a hedge against inflation, that conversation kind of goes out the window because we've seen inflation was up 8.6%. Bitcoin's down like 40% in the last year. So that obviously goes out the window. So it's going to be really, really interesting to see what happens with crypto as we get through the next few months because nobody knows.
Well, moving on to a story that maybe makes sense given, or doesn't really make as much sense given the current environment. But here we go. More luxury retail brands are gearing up to accept crypto for payments. A lot of this to do with attracting just a younger consumer to the market. Gucci kicked off its leap into Web3 by announcing it'll soon accept crypto for payment last month. Now, Flyfish, which is a luxe retail online marketplace, is throwing its full weight behind cryptocurrencies. Here's how it works. Customers shopping on the luxury marketplace will be able to scan a QR code to access their crypto wallet and purchase goods using one of 7 cryptocurrencies, including Bitcoin, Ethereum, and Binance Coin. That is according to Farfetch. Crypto payments will be accepted from its top-tier private clients in the coming months first, ahead of a wider rollout to all customers in the US and the UK and Europe at the end of the year, and other countries will follow in 2023. So Farfetch says its payments provider will accept the crypto from the customer on behalf of Farfetch and then exchange it into fiat currency. So is this a good or bad thing? Right now, it feels like a bad thing because people shouldn't maybe be spending money on these luxury goods, I guess just depending on who you are and given the bear market. But on the flip side, it does kind of, right, back to kind of opening that access to more people to be able to have something like this. Zaid's got things.
Horrible timing. Horrible
yeah,
timing.
not the best timing.
The people that they're trying to get to buy these $80,000 luxury bags or whatever, they don't got any money anymore. You know, they don't got any money.
Yeah.
So these guys, these luxury brands should have come out with this last summer when things were just popping off.
Good point.
No one's got money anymore, guys. So I mean, cool. Maybe, you know, they're getting ready for the next bull run. That's nice, but can't imagine this getting much volume, you know.
At least right now, right?
Yeah, it's not happening right now. We're all just, my brain is just like fogged by like the sea of red that we've been bombarded with since like this entire weekend. So it's hard for me to kind of see past that, you know?
Yeah, well, on the bright side, this is kind of these lulls are usually a good time when people that work in the industry can, you know, take a step back and work on building and keep working through the innovation. Like, I don't know about you, but I would love to, you know, talk about digital assets kind of taking that next step in its growing up, you know, so we're not so much in these growing pain moments, but, you know.
100%. Yeah, I agree. I think, you know, right now is when, you know, when you're in tougher times, especially in the equities market, just in general in the economy where there's talks about recession, what you do right now has a lot of bearing going forward. I think there will be better times going forward. It may take a year, it may take whatever, but that's something that, you know, your decision you make right now happens. Now, in terms of this, I think it's good times for the retailers and for the platforms because, you know, people are less optimistic. They may be getting rid of their tokens, and these platforms are getting to, you know, take those tokens. You know, if you're a consumer, you probably want to hold on to them in some instances, depending on your own portfolio settings. But, you know, that's an interesting thing. And as they mentioned, it could be bad times. It could be opportune times for the retailers to kind of implement this possibly.
I still want to know, like, I didn't look into the details of the story, so I apologize. But like, so there's like an intermediary between the luxury brands and the consumer, right? There's some sort of like middleman company that's
like a payment provider.
Yeah, payment provider that's doing this, right? So it's not the luxury brands have like their own crypto wallet or whatever, right? There's like someone in between, and they're just kind of partnering with them. And the other part of it is, I'm bullish on crypto long term. I still don't know if it's a good payment system because again, because of the nature of it, every time you do a transaction, you got to pay taxes on it. As in, like, you know, let's just say I bought Ethereum for $1,000, spend it at $1,200. I got to pay $200 capital gains tax on the $200 that I'm spending it at. So there's some stuff that got to work out there. But yeah, you know, progress, slow but steady.
Progress it is, guys. So Zaid and Cole, get ready to play Xbox games. But guess what? Without an Xbox, Microsoft just announced its Xbox TV app is coming to Samsung TVs this year. The app will enable cloud gaming on smart TVs with users not having to buy a console or any other hardware. The app will offer a list of games that users can access through the Xbox Gaming Ultimate subscriptions. Currently, there are more than 100 playable titles, including the Halo series, which is one of my favorites. Microsoft said its Xbox gaming segment revenue was up 6% year over year. This is according to their most recent quarterly reports, ended March 31. Hardware sales were up 14% year over year, which is actually a positive sign for console availability. Software and services up 4% year over year with growth from Game Pass. So big thing here is, are we moving much more closer to cloud gaming being more of the native side of things versus hardware and console, which I'm nostalgic because I love the hardware and console gaming. Like, that's me. I'm mad at Bernie Zaid there. I'm not hardware and console gaming versus, you know, the other items. But what do you think, Zaid? Would you prefer to be more console based, or would you like this move that they're making towards cloud gaming?
Well, now, like, you know, if you asked me 10 years ago, I'd be all about the console because I want like the latest 4K graphics, no lag time or whatever, or latency. Now I'm a very casual gamer, right? I play a game of Madden here or there, play some FIFA, play some 2K. I think this is awesome.
Yeah.
I think this is awesome. Being able to play AAA titles like Halo without having to need a console, as long as they can get rid of the latency issues and things like that. If it's a good experience, I'm all in favor of this. I think they're going to expand it beyond just smart TVs. I mean, they've already started to do it. You can play on your phone, on your computer, and things like that, all in the cloud. So I think that's the future. And Microsoft has a leg up here because they obviously have like a growing cloud platform as well. So this is really smart. This is how they're going to differentiate themselves from Sony, because again, Microsoft doesn't make that much money from like selling consoles. That's not the high profit margin business. The high profit margin business is kind of like the service that they're developing, the Game Pass service, kind of like the Netflix for games. So if they can make it all about the cloud gaming and make Xbox Game Pass like a really, really good deal and get people to sign up for that, which is what I have, this is a home run for Microsoft and a very good differentiator between them and Sony.
100% agree. I think for Microsoft, you're selling and you're getting people on board to the platform that is higher margins in this business where everyone is talking about cash flow just because what's happening to growth companies. If you're shifting your business to higher margin business, hopefully having more cash flow, more earnings at the bottom line could be beneficial near term, and it definitely will be beneficial, long term for a lot of these companies if they implement that.
Agreed. Nicole is dying to give us her take on this one.
Sorry, guys. No, you guys are just like so good at explaining it and getting into it, but awesome. No,
we gotta get you. I'll send you an Xbox. Like you gotta get even more gaming on an Xbox.
I played on a Switch the other day when I was at a Best Buy.
Switch is fun.
Which, frankly, I'm surprised Best Buys exist still. But anyways, moving on.
Yeah. All right. So we've talked about crypto. We've talked about luxury brands. So this is the best way to wrap the show. Tiffany and Company. The company famous for selling overpriced engagement rings and things like that, and they're like beautiful blue box. Yeah, so they bought a toy rocket NFT for $380,000, which is the cheapest ring that you can buy there, actually. So we're gonna get into the detail of this wild purchase and the real life crossover of NFT projects in today's Fresh Mints. So I'm going to get into the Tiffany purchase, right? So there's an NFT project called Tom Sachs Rocket Factory, where you can and then launch a real life version of this rocket. We're going to get into that in a bit. But as far as the actual purchase by Tiffany, I guess each one of these rockets have a brand associated with them. Now, I don't know how Tom can just get away with putting these random brands. I mean, I saw Ferrari on there. I saw Campbell's Chicken Noodle Soup. I saw, a lot of good brands on there. He just puts these brands on these NFT rockets. And I guess Tiffany bought a rocket that was a Tiffany branded one for $380,000. I think they've worked with Tom Sachs before, so there was some sort of like mutual understanding there. And they tweeted, "The evolution of fine art collecting is here and the future is bright with NFTs." And then they're pleased to announce the acquisition of the Occupy. Is that what it is? So yeah, and Pharrell also got into this project. He bought a Chanel branded rocket and a Miami Vice themed rocket sold for 20 ETH, which is sold on OpenSea, which was around $86,000 at the time. I'm not gonna lie to you guys, I don't get this. I don't look. When it comes to NFTs, I flip flop. Some are cool, some are kind of like I don't get this at all. This is in the I don't get this at all camp. I'll open it up to you guys. Like, what do you think about this?
Another well-known brand that's jumping into the NFT game in whatever way. It makes sense. I feel like I've mentioned this when we talk about celebrities or musicians dropping NFT, tickets or whatever. Are you going to be on the innovation train or not, right? And that's what Tiffany is doing with this and any of these other brands. I mean, I was just talking about, right, like luxury retail stores getting more into the NFT and crypto space. So it's not that shocking. I think we'll see like interesting ways. This is definitely like the way they decided to do it is, to me, what maybe is like getting us all confused, like why a rocket and how. And,
I have so many questions.
I mean, honestly, like a beautiful NFT of like some Tiffany's jewelry could have been cool. Maybe they need to partner up with Beyonce, because I know Beyonce is one of their spokespeople. So if Beyonce's doing something, the world will do it. So Tiffany's, take my brand advice. Hit up Beyonce about some NFTs.
Probably costs a little bit more than $380,000, but probably worth the extra price.
Yeah.
Hey, Nicole, why don't you tell us about this artist, Tom Sachs? I know you got some details on this guy. Okay, I'll tell you guys about this artist. So Tom Sachs, he's a contemporary artist. I checked out his Instagram. Pretty, a few 100,000 followers. Makes unique, I don't know, exhibits. His previous works have ranged from the Gucci Glock handgun.
Oh, scary.
I don't get it. To sculptures of random functioning electrical devices. To getting a gallery owner arrested for Sachs allowing New Yorkers to take live ammo from a vase at a show. This guy knows how to, like, to get some press. So, like I said, I guess he's a pretty famous guy. I'm kind of at a loss for words here. And the actual project itself, there's a total of 1,000. Okay, so the way the rocket works is I'm gonna start rambling here. You guys just cut me off whenever I've gone off the deep end. So the way this rocket works is there's 3 parts to the rocket. You have the cone, you have the body, and you have the tail. Now I tried to actually make one myself, but for some reason my wallet wouldn't connect properly, and then I don't think I'm in the income range to actually be able to do this. So there's 1,000 rocket cones, 1,000 rocket bodies, and 1,000 rocket tails. And you can basically mix and match them to make what he's calling a Franken rocket. And then once you do that, they will then actually, I guess Tom will actually assemble the rocket, your NFT rocket, and then he will launch it. And then if they can find it, they will send it to you.
Well, I
don't know, man.
This is creative. I mean, we're talking about bear market everywhere. Like, people are still paying $380,000 for NFTs and some
This was a few weeks ago, so I can't imagine. I'm pretty sure Tiffany's is kind of like, probably should have waited a couple weeks.
Like, what did we do? No, I mean, yeah, I think it's interesting. It's provocative. You have an artist that seems to be provocative, and you're having all these brands collaborate. Utility, it seems to be, having this brand, this cachet of someone that's obviously have a following. You're right. Like, this just seems to be more for high value, high-earning collectibles rather than just like the average person that would want to like be interested in this. That's kind of where I think that's where this sits.
Yeah, I mean, it's not a profile picture project like you have like with typical NFT projects. It doesn't really have a utility, I don't really think. You're not getting royalties or anything like that. You're not really playing a game. It's kind of in its own unique world. And I don't really know what the market is for that, but I guess there is a market because you have big brands like Tiffany and you got Pharrell and people like that paying almost six figures for this stuff. So yeah, that is the rocket project from Tom Sachs. So, all right, we'll wrap there. Nicole, tell us what you have next.
NFTs have been making waves as art, but we must also remember that NFTs have utility. Today, we are speaking to the founder and CEO of VCR Group, which has released a set of NFT memberships called the Flyfish Club that gives exclusive access to a top-tier restaurant right here in New York. Please welcome David Rodolitz.
How are you guys?
Happy to
be here. Nice to see you guys.
Yeah, let's dive right in. So can you tell us a little bit more about your Flyfish Club and how it works?
Yeah, so Flyfish Club is a members-only dining club where the difference is membership was purchased on the blockchain, and instead of paying ongoing dues and applications and reoccurring fees, our model is that our members actually own their membership. It's their asset, and our club is focused around utility. So this is theirs to enjoy, and it's just a more modern take on a concept that has been around for a long time, and we applied, some modern innovation and technology to it. So we're leveraging NFTs as a way to authenticate ownership over something, but this is very much a utility-based, in real life project where you're sharing social experiences, where you're going to be with people. This is not a metaverse play. This is not a digital play. This is not a crypto investment or a speculative investment. This is not about an NFT collectible. This is about a private dining club curated by hospitality experts and and celebrated chefs doing what we do best. And we're leveraging a technology, i.e. NFTs, to find a new way to pursue our plans. So yeah, we're really excited about it. And we'll be launching the actual club next year. But this year is full of other utility programming, special events that we're doing with our members through the course of 2022 to build that community, to build that brand, to spend time with people, to really kind of just create those social experiences in a more intimate forum.
Very cool. If there's anywhere in the world that appreciates hospitality and exclusivity, it is definitely New York. So how did you get the idea of incorporating NFTs into the restaurant industry?
Well, last year, a lot of people started hearing the word NFTs. It became, they've been around for a few more years than that. But 2022 or 2021, I'm sorry, was where it started to make headlines and everybody was trying to figure out what this was. In March of 2021, after I formed VCR Group with Gary Vaynerchuk, Josh Capon, and Connor Hanlon, Gary came into my home. We were having brunch, and he was just, kind of going crazy and really excited about NFTs and how they were going to change at the macro level, how they were going to change all businesses and the exciting innovation behind it. And Gary felt that it was very important for me to get very educated on it very quickly. So I spent about the next month, a couple hundred hours really just learning everything I could about NFTs. And really what got us excited was not about this collectible or digital art. And, although, there is something great happening there, our project is not about collectibles. We zoomed in, we wrote about 10 different ideas of how to leverage NFTs. And then we really just kind of had this aha moment that this membership club, was the best use case for it. And we leaned into that. Gary then had his VFriends launch, I believe it was May of 2021, and that went extremely well, which further got us excited about this innovation and what it could be, and in real life experiences and utility. So we really kind of set out to be this utility-based NFT project, very different than all the other ones, very much an in real life social experience, dining club, be with people, and just amplify the business model by leveraging a digital technology. So May, Gary validated it with VFriends, and then from June forward, hired a team of developers, Web3 specialists, designers, and spent all of 2021 from June on building this, conceptualizing it with my partners, and then doing a small launch in December, and then doing the public launch in January.
Yeah, you mentioned Gary Vee, and obviously he's a massive name in the digital asset space. Taking a little step back, what is maybe the origin story of how you and Gary Vee partnered up for this?
Yeah, so Gary and I have been close friends for about 12 years, just more on the social side. And in 2014, he invested in a restaurant group that I co-founded and was the operating partner in for a long time, called Empeon. So we had a little, business connectivity, but our relationship was definitely more on the social side. And then throughout, the next, 7 years after that, spent a lot more time together, getting to really know each other more at a deeper level. Friendship grew. Gary loves doing business with friends because he has very little time, and that's his way of spending time together. And over COVID, we spent a lot of time just talking about the industry, talking about, the unfortunate reality about COVID, what we hope the hospitality industry would look like on the backside of COVID. Gary's very well known for marketing and branding and technology, and myself, Capon, and Connor Hanlon, we believe we have the hospitality and the culinary side down to a science, and we're pretty experienced there. So we felt like marrying Gary's skill sets and bringing, our industry into the modern era, leveraging media, leveraging technology to create new forms of IP, we felt like that was a really good formula for success. So it all stemmed from the social side. Gary watches everything, and just the relationship and the trust continue to build throughout our 12-year history, and then got very accelerated over COVID, formed VCR Group, and now we're here.
And one of the benefits of ownership of the Flyfish Club NFT is the possibility of leasing the NFT out. Could you explain how that would work?
Yeah, so I mean, a lot of people got very focused on this piece, and transparently, it's the smallest part of our project. We felt that everything about our project is focused on utility. We want people, it's great that everybody minted these tokens and Flyfish Club sold out very quickly, but the purpose of it is an in real life dining club with social experiences. So the club needs to be busy. So, a lot of our members are affluent people, they're well traveled. So we started just kind of, playing this out. And we thought that there'd be a lot of times that some of our members aren't in New York, aren't local, maybe traveling. And we felt like a leasing program would allow these people to do two things. It would allow somebody else to explore and discover Flyfish Club and get a little taste of what it is to hopefully potentially, become a member down the road. And then it would also allow the person that owned the membership to not just not get any, benefit of it. They could lease it out. They don't have to sell it, which is a larger commitment. And they could allow somebody else to enjoy it and explore and try the club. So the leasing mechanism was an idea. We did it on a monthly basis. We're still building the technology around it, but it was really just another mechanism to make sure the club was busy and to get butts in seats with people that are local and that want to experience Flyfish Club. It wasn't about trying to find another monetization or a secondary marketplace and passive income and all of these things that everybody is, found this little thing and blew it up. And I think it got a little taken out of perspective. The intent is utility, to be at Flyfish Club. And that was just another mechanism as hospitality operators to make sure that our club would be busy with people that want to enjoy it.
Mm-hmm. And where do you see a future where a majority of restaurants and hotels maybe have this type of NFT exclusive membership? Is that kind of where we're heading, or do you think this is kind of going to be still very niche?
I think you're going to see more and more brands dabble in the NFT space. You're already seeing it. There's a lot of groups that have started to conceptualize or launch their own projects. I don't see the majority of hospitality companies doing this. I still think that it's very nuanced. I think the technology around it has to continue to innovate, has to continue to become more user friendly. I think security and safety is a big theme around this, and there has to be stronger security measures taken for this to become widespread and very common. I think there's definitely an appetite. I think you're going to see it, NFTs with ticketing and experiences and events. That definitely is going to be something that you see, tremendously utilized. I think recently, late last week, you saw Tao Group announce something, that they're going to be leveraging NFTs for ticketing and experiences. And, they're one of the largest or the largest hospitality group in the world. So I think it's on people's minds. But like everything, you got to think about why are you doing this? What value are you creating for your members or your users? What value are you creating for yourselves, your partners, your community? If this is just another forum to try to make, quick money and the intent behind it, if it's not pure, I think those are the reasons why it wouldn't work. So it all has to come down to that NFTs, if it amplifies the business and creates better benefits, better experiences, more transparency, I think those are good benefits to it. And if people try to do it for the right reasons, we're going to see a lot of it. If you start to see a lot of people popping up to try to just make some quick money, I think it's not going to work that well. And then that's going to, be the headlines, and people are going to be afraid to, pursue that innovation.
NFT utility just getting started. Thank you so much, Dave, for joining the show. Much appreciated and excited to see the exclusive club take off.
We're excited to have you guys there next year.
Well, that does it for today's show. Be sure to like, comment, and subscribe, and hit that notification bell. We'll see you tomorrow.
Hey y'all, thanks for watching. Make sure you tune in every day. Also hit that like, subscribe, and notification buttons. We'll see you tomorrow.